Hello, everybody. Hello. Welcome back. Good to be here. Ed Ponsi, your FX educator, here on behalf of FX Street once again. Oh, yes, everybody. Okay, he's still talking out there. Draghi is still speaking away. And as we take a peek at the euro, you can see he's really done quite a bit of damage here. This is the, you can see, look how small the candles are prior to the event. This is what we mean when we say, look, you got to be careful going into these events. That's the calm before the storm. You know something big is coming. Everybody knows something big is coming, but nobody knows what it is. So nobody wants to go long or short, and the price just lays around. And then suddenly, boom, candles get huge. Now, some poor guy, every trade is a buy and a sell. Is it fair to say that? Every single trade is both a buy and a sell. I mean, when you buy a loaf of bread, right, you buy it, you can't buy it unless somebody's willing to sell it to you, right? Or if you sell something on eBay, you can't sell it unless somebody's willing to buy it from you, correct? Well, if this wick goes up to here, that means somebody bought it up here and somebody sold it up here. Now, can you imagine being the person who paid 108.60 for euros like less than 2 hours ago, and now the price is 106.60? It's 200 pips difference. How would you feel about that? You'd probably feel pretty badly about that, and you should, because whoever bought it up there was probably chasing it higher, right? They saw it moving up, they see the price moving up, and they start clicking the button, and they end up clicking the button here because they think it's going to go higher still, but it doesn't. And it seems like reversals are really more likely than continuation when it comes to these type of events, referring to non-farm payroll, FOMC meetings, and of course today's event, an ECB meeting. So right now the question and answer session is still going on. It's just going to let that go because really, if there's any big move, everything that we covered earlier was the meat of the entire presentation. The last 5 minutes of the previous session, we covered all the important points. There's no need to rehash them. But if you missed it, if you missed the prior session, please visit the archives. We archive every session, so you can go back and look at it. And then you'll know the last 5 minutes of the previous session will tell you everything that is meaningful that was said by Draghi today. Okay, now, so we'll let that go for now. And let's get to your questions. If you do have questions, I want you to feel free to ask them. When I had my first job on Wall Street, I asked so many questions that when people saw me coming, they would actually try to hide from me. They would duck down corridors and, they would just say, uh-oh, here comes that guy. He's going to ask like 20 questions. And they were probably dumb questions, They say there's no such thing as a dumb question, but I'm sure to the people I was speaking to, they probably thought, oh, God, I don't want to answer this newbie's questions, But, I'm here to answer your questions. I remember what that felt like. That, it felt terrible to have people avoid answering your questions, and part of it was, I got to tell you, that they really didn't want me to succeed. I didn't realize this at first. But it's a very alpha-type environment on Wall Street, and they really don't want the new guy to come in and start kicking butt and making everybody look bad. They don't want that. It's the last thing they want. So they're not going to help me, right? But I am here to help you. So if you do have questions, get them in. I have a question already. I'm on the euro yen and it's still going short. Do you think it will hit a support level? I'm still trying to learn how to trade these events. Let's take a look at euro yen. Now, we did setups on euro yen. I don't know, Lionel, if you were in the room when we were doing our long setups, and our long setups were based on moving averages. Right, there's a euro yen setup based on a moving average. So I think it'll. If it's coming down now, I think you could very well get this down to the 10-day moving. The 10-day moving average is support, right? Bounce, 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 breaks through here, but I still consider this support. So if I'm short, this is my target right now. This is my target. That blue line. That blue line is 121.01. So there's several reasons why this makes an interesting target. One is because it's the moving average, and the moving average has been acting as support. We've seen evidence of this going back for over a month. But another reason is because the moving average right now, yes, the moving average is support, but round numbers like 121.00 can also act as support. Orders tend to accumulate on round numbers. So very often you'll see the price rise until it hits a round number, and then it'll turn and go the other way. Or you'll see the price drop until it hits a round number, and then it'll turn and go the other way. Why does this happen? It happens because people have a tendency to place orders on round numbers, and brokers make commissions when these orders get filled. I'm not talking about your order or my order on a retail brokerage platform. I'm talking about a big company. This is Euro Yen, right? So let's say a European company needs to buy a lot of yen. So this European company calls up the bank. Maybe they call Deutsche Bank, right? Because Deutsche Bank is the world's biggest Forex trading bank. So they probably call Deutsche Bank and they say, hello, I would like some yen, please. Well, what they're going to say is, buy me as much yen as you can at 121. Now, why do you think they're being so imprecise? Buy me as much yen as you can. I need a lot of yen. I need to buy an electronic component from a Japanese company for a product that we're making here in Europe. Buy me as many euros as you can at 121. See, now there's a big order at 121. If the broker knows there's a big buy order at 121, the broker has an incentive to push the price down to 121. Now, that's easier said than done. Right now, the price isn't really that close to 121. It's around 121.50. But let's say it drops down to, say, 121.20, 121.10, and maybe you get into a quiet time of day, like, say, the quietest time of the trading day is like 8 hours from now. So let's say it's 8 hours in the future. It's 5 o'clock in New York. It's 10 p.m. in London. It's 5 a.m. in Tokyo. There's very little activity anywhere. The price ends up getting very close to 121. The broker will take that price and give it a little shove so that it hits 121. How does that happen? How does the broker push that price, give it a little shove, maybe just push it 10 pips so that it hits 121? They have to sell. Selling makes the price go down, and buying makes the price go up. So, they'll wait till a quiet time of day, and they'll see that if they see that the price is close enough, they'll hit the sell button until the price reaches 121. As soon as the price reaches 121, they'll buy back whatever they sold, and the price will pop back up. Why are they doing this? Because if somebody has a large order at 121, the bank makes money when the order gets filled. The bank makes a commission. And these are huge orders. Remember, Forex trades over 5 trillion US per day, over $5 trillion per day. Most of those trades are not placed by people like you and me. Most of that is placed by big companies who simply need currencies to do business. So if I'm an American company, I might need euros today because I cannot pay my European employees in US dollars. I have to pay them in euros. I might need British pounds today because I'm buying a small company in Great Britain. I can't give them dollars. They're British. I need British pounds. I'm buying an electronic component from a company in India, so I need Indian rupee. I'm willing to bet that right at this moment, General Electric probably needs a half dozen currencies. It's a huge company and they do business all around the world. I'll bet they need a half dozen currencies right at this moment, right? Now remember, these are not traders. They're not betting on the euro to go up and down against the yen, so they're not really looking at charts. They're not really looking at charts. He's like, dude, I need euros, or I need yen, I need British pounds, I need dollars. They need something, and they're like, okay, where is it trading right now? 121.50? If it drops to 121, buy a million yen for me, okay? Buy 10 million yen. 10 million yen is not much. 10 million yen is like $100,000. Right? And we're talking about a market that trades $5 trillion a day. So they're probably saying, buy me 100 million yen at 121. Buy me 100 million yen, please. That's only about €1 million. Right? Very small trade by their standards, right, in the interbank. So understanding the structure of the market actually helps you to understand where to place entries and stops and targets. So for example, if I were long right now, I would want my stop under 121. I would want my stop under 121 because I know there's a chance they're going to push it down to 121, but they're probably not going to push it farther than that. So I'm going to use that. On the other hand, if I have a target, my target needs to be just above 121. Just above 121. And this is what we refer to as round number theory. Now, the best example... Oh, no, I wasn't sorry. I will insert a 10 EMA then. Thanks. Yeah, that's just one way to look at it, right? Think about the round numbers themselves, too. The EMA, the 10 EMA, is sitting right on the round number. Now, I'm going to show you something. Some of you may have seen this before, but it's the most impressive, the best example I've ever seen of round number theory in actual use. And it happened in late June of this year on an event that I'm sure you've heard of called Brexit. So now we're already in December now, right? I got to go way back for this. Well, I'm back. There you go. There's getting there. Okay. So this is Brexit right here. Let's show you. This is the most amazing example of round number theory ever put to practice. Now look how quiet the price is prior to Brexit. It's the day of the vote. It's 6:23. And as the day goes on, you see the volatility. It's really volatile early. As the day goes on, the volatility drops. It's now evening in the UK. Look where the price is, 148.20. Now, important to know going into this that prior to Brexit, the price had not touched 150 in a very long time. It's highly likely that there were orders waiting at 150, just waiting to be hit. Somebody probably said, hey, if that British pound, if that hits 150 against the dollar, sell me as many British pounds as you can at 150. The problem for the broker is, what if the price doesn't hit 150? If the price doesn't hit 150, then the orders do not get filled and there's no commission to collect. Now this is New York time. This is noon, 1 p.m., 2 p.m., 3 p.m. The afternoon is wearing on. and Euro USD is in a fairly tight range. And look what starts happening late in the day, which tends to be a very quiet time of day. We're approaching 4 o'clock. Suddenly there's a lot of price activity. Now we're at 4 o'clock. We're now entering the quietest time of the day. All of a sudden, quietest time of the day, huge movement, huge candle. 120 pip candle in 10 minutes during the quietest time of the day. What's happening? They're probably trying to run this thing to 150. They're hitting the buy button, pushing this up, trying to run it to 150. Look at that, 149.80. It goes above 149.80. It goes as high as 149.95, and then it fails. Whoops, we missed it. So what do they have to do now? Start pushing again until they hit it. Push again until you hit 150. And once you hit 150, all the orders that have been waiting at 150, waiting to get filled, now they get filled. Now the order from the person who called and said, hey, sell me as many British pounds as you can at 150 against the dollar. Those orders are now getting filled because the price is now at 150. So how did they get it there? They waited until the quietest time of day. This is 5 p.m. This is literally the quietest time of day in the market, 5 p.m. New York time, 10 p.m. London, 5 a.m. Tokyo. Suddenly they give it a big push. What are they doing? They're buying pounds and selling dollars. They buy it until it hits 150. When the price hits 150, all the orders get filled. Are they going to keep buying? No, it's mission accomplished. They wanted to hit 150. It hit 150. They just filled a whole bunch of orders. They just collected a whole lot of commissions, and now whatever they bought, they had to buy to push it up. They pushed it up. They accomplished their mission. Now they're going to sell whatever it is that they bought to push it up, and then they sell. They push it up, and now they're selling, and it goes back down. They're selling because there's no need to keep pushing. So they made darn sure that 150 got hit. 150 right there. So think about this. If you know in advance that there's a chance that they're going to run it to 150, if you're long, do you want your target above 150 or below 150? I want my target below 150. That's if I'm long. What if I'm short? What if I'm short? If I'm short, I want my stop above 150. If I know there's a chance they're going to run it up until it hits 150, I want my stop above 150. Now, let's say the opposite also, right? So here we go. Now it's Brexit time, and the results begin coming out, and look at the huge move. So they just push it up just enough to hit 150, and then they stopped pushing, right? And then suddenly the results begin coming in, and they realized the polls were wrong. And in this case, the pound is going to drop. It's going to drop 500 pips in 10 minutes, right? And then it's going to bounce. What's happening here, by the way, different towns are reporting their Brexit results, right? And so Sunderland, I think, reports, and it's like 61% leave, 39% stay. And everyone goes, oh my gosh, that's very different from the polls. And we see a 500, 600 pip move. Then another town reports, and they say, we're going to stay, and boom, it pops back up about 300, 400 pips. And this is going to go on all night. But eventually, the price starts getting close. You see how it starts dive bombing here? Another town reports they want to leave. Now watch what happens with this price. They are going to push it. I'm going to put a line exactly at 140. Okay, you can't, it's right down there. Now, if you're long, would you rather have your stop above 140 or below 140? I'd rather have my stop below 140. If I'm short, I want my target above 140. Here comes the price diving down. Now, the brokers and the banks see this and they say, hey, let's give it an extra shove and make sure it hits 140 because we have orders at 140. So they push it down, and you're going to see it's just enough to kiss 140. And then it's going to jump 500 pips. So it's already dropping on its own, and they say, okay, let's push it a little bit. Let's keep pushing it. Keep selling it until it hits 140. Now buy them back. Okay, it hits 140. The orders get filled. We collect the commissions. Now buy them back. Buy them back, and it pops back up. And if you look at this chart, look at this. It came up. They pushed it up until it hit 150. And then it was falling on its own, and they gave it a little extra shove, just enough to make it hit 140. Do you know what? Now, if you understand why, you have to understand that this happens all the time. This is just a very good example of it. So very often, you'll see me put a stop. If I'm long, my stop will go under a round number. If I'm short, my stop will go over a round number. Right? Also, if I'm short, my target will go above a round number, and this applies to your euro-yen trade. I'm saying put your target above 121 because they might just push it down to 121 and then let it pop back up. So don't put your target past 121. At least put one target just a little bit above 121, right? At least one target. You don't have to get out of the entire trade. But at least take some profit there because this could happen. They could push it to 121 and then it pops back up. You know, like a slingshot or like a boomerang. It comes right back. Okay? So that's round number theory explained, and there's just no better example of it than this particular chart, right? And we see this all the time. If you start looking at different charts, you're going to notice this a lot more. Reversals that happen right on round numbers. It's not a coincidence. They have, when I say they, I mean the banks and the brokers have a motive to push prices to round numbers. And that motive is commissions. That's how they make their living. Okay, it makes sense. Do you routinely look at the daily first? Yeah, absolutely. Everything starts, you want to see the forest first, in my opinion. You want to see the forest first and then see the trees. So if I were analyzing this one right now, right, I would make it a daily and work my way down. By the way, pound's a little bit off these last few days, and part of that has to do with becoming a little bit more likely. If you listen to the rhetoric coming from the Prime Minister May and from other officials in the UK, Brexit becoming more likely. The way is slowly being paved. And yet again, it's another flag. You see it here? Right, so we got as high, I think we touched 128. No, we did not quite touch 128. If you look at that chart, right, you've got this rounded bottom. Really, it's a double bottom. Breakout, flag pattern. It runs. Another rounded bottom. Breakout, flag pattern. So the chart is saying that the path of least resistance is higher here on British pound. And that's interesting because usually anything... Sorry about that. That's 9:30. That's the opening bell for the New York Stock Exchange. Usually anything that refers to Brexit becoming more likely usually makes the pound weaker, and that did happen here. But it's not really a very strong reaction. The bulls are in charge here. Look at the size of the green candles, and then look at the size of the red candles. And this pattern really is what is telling you that flag pattern. It's the same thing here. Big green candles, little red candles. So who's in charge, right? The bulls are in charge. That's called a bull flag. Here's another bull flag, right? The bulls break to new highs. Then the bears get their turn to respond, and their response is weak. So path of least resistance is higher. And where does it go? Look at this 129. I've got this line right on 129. Look at the bounce and bounce, and then it breaks. So somebody was buying here at 129. Somebody was buying here at 129 also. So if they're buying at 129 and they're losing now, well, you would hope that they took a stop and they got stopped out and did not take a big loss. But if somebody is sitting on a big loss, they are going to be selling. First of all, they're very happy that the price is coming back up. They're rooting for it to come back up to their break-even point, and if it gets to their break-even point, behavioral finance tells us that they will probably sell, right? If you're a buyer here, well, first of all, heck, you should have made money. It went from 129 to 134, and then it did it again, 129 to 134. But if for some reason you're still in this, you're probably going to sell at 129. And that's why 129 former support becomes resistance, because people who bought and are losing have a tendency to want to break even. This is all part of behavioral finance. By the way, a great book on that topic that I can highly recommend is called Behavioral Finance by James Montier. Great author, very funny, but explains behavioral finance in great detail. Ed, can you comment on Corning monthly and weekly? Yeah, let's take a look at it. Let's take a look at it. And GLW, we used to call this the glowworm. Right? Wow, look at that breakout, huh? So daily, first of all, very nice uptrend. This uptrend has been going on for over a year. Right? Higher lows and higher highs. Let's say starting from here. This is a bull channel. Now, I would not be a buyer here, because look where you are in this channel. You're at the upper boundaries of this channel. You're close to the upper boundaries of this channel. So I wouldn't be a buyer here. I would also suspect that after these great few days that the company's had, it's probably overbought on the old RSI. Yeah, it is. Now, being overbought doesn't mean that you should sell. You don't want to fight the trend. The trend is up. So for someone like me, I can only buy. I can't sell if I'm in an uptrend. Now let's go to the monthly. The request was monthly and weekly, so let's go super long term. You look at that. I remember these days? It went from 10 to 110 and back all the way back down and laid there forever. But look at that. You can see that channel on the monthly chart. And you're also very, very close to breaking above resistance. Here, you've broken above one. And here, you're right at resistance from this patch in 2014 right now. So there's no way. I give you 3 good reasons not to buy this right now. Reason number 1, you're at the upper end of the channel. No matter what time frame we look at, we're in the high end of the channel. Reason number 2, this is a major resistance point. It goes back a few years, but it clearly exists. And reason number 3, that if I look at the daily, I am in overbought territory, right? When that line crosses above 70, you can see that it's at 72 right now, and that turns red. When we're above 70, overbought, can't buy it. So we looked at the monthly and we looked at the daily. Let's look at the weekly here too. Weekly, and again, weekly, you see pretty much the same picture. It's not overbought on the weekly or the monthly, but it is on the daily. And you're definitely at resistance. You're definitely up for the high end of the channel. So I think you need a pullback to buy this, gang. I really do. But it's interesting to see this stock going up. I remember trading it way back when, in those days when it was just an incredible stock. That one, and how about JDS Uniphase? Does that one, that doesn't even exist anymore, JDSU. JDS Uniphase was also fiber optics. GLW and JDSU were fiber optic, the big fiber optic companies, and SDLI as well. Okay, so anyway, that's pretty fascinating. It's a very bullish chart. I would be a buyer. I just wouldn't be a buyer at this price. It's got to pull back a little bit. Let it pull back on the daily. Let it fill this gap. You can see this gap we got here today. At least let it pull back so that it's in the middle of the channel. Does it have to go to the low end of the channel for you to buy it? No, no. In fact, it may never make it back to the low end of the channel. We don't know. I would say the center of the channel is your buy point. The center of the channel, not the upper, not the lower end, but the center. And if we just want to eyeball it, right, I'll just drop a line approximately in the middle, right? See that dotted line? What's that dotted line telling me? It's telling me I can buy it at 24. Let it come down a little bit. Let it come back to the center of the channel, and let it cool off a little bit. By the way, you want to know a really good one that I've been into lately? Wendy's. Look at Wendy's. Cup with two handles, explosion, away it goes. Who knew, right? Wendy's is amazing right now. It's overbought, but it doesn't really matter that it's overbought because it just keeps going higher. Overbought means don't buy. It doesn't mean sell. It means don't buy. You let it come down from overbought, and then you can buy the dip. This needs to dip if you're not already in. The breakout point was way back here. What a beautiful chart for Wendy's. Okay, gang, that's going to do it for me. I've really enjoyed speaking with you, and I think it might be a while before I speak to you again. I might not be seeing you again this year, but I will be back. And I'll look forward to speaking to you in the future. So, again, my name's Ed Ponsi. Thanks to everyone who listened. Thanks to everybody who helped make this an amazing year. I've enjoyed it a great deal. And I'll see you soon. Might not be this year, but it'll be soon. Okay. Thanks a lot, everybody. Merry Christmas, Happy New Year, Happy Hanukkah, Happy Holidays, whatever makes you happy.